All right. Hey, traders, Raghee here. Welcome to Charts and Coffee for Thursday. PPI Thursday, by the way. Lots going on today. Let's go ahead and jump into the charts here. All right. A few things in terms of, well, the mood of the market. Let's be frank. What has been the mood of the market? Now, before anybody goes off and blames the PPI, I'm sure that has not helped the situation. Take a look at what we were already doing on the 5-minute chart before that 8:30 hot zone came out. We were already inheriting a little bit of weakness from the European Open, from the UK Open, from the Asian session close, and you can see what's been happening ever since. And even as we go into 7 a.m., if there's anything that we can see, 7 a.m., which is that early, I like to call it the first cup of coffee in New York trading session, right? Since 7 a.m., we have taken a decidedly bearish turn. And we'll see what happens, right? I mean, the day doesn't start until 9:30, and we will see where we are after 10 a.m. So that's something we do a lot in the Sector Secrets room, which is we know 7 to 9:30 is its own world, and then 9:30 to 10 it's its own quirky little world, and then after 10, really the day begins. All right, so with all that being said, good morning, good morning. Hey there, Ann. Hey there, Debbie. Great to see everyone. Okay, so what do we have today on the calendar? Let's go take a look at the calendar for today. And you'll see as we go into Thursday, the hot zones we've inherited: PPI, Philly Fed, unemployment claims, building permits, housing starts. 5 big hot zones to sway our bullishness or bearishness. Again, we'll see what happens at 9:30. At 4 p.m., we have FOMC member Cook speaking, probably, obviously, outside of our regular session trading hours, but nonetheless could affect the way in which the after hours, the Asian session, and even Friday morning pre-market could behave. We'll see what happens. All right, so if it isn't already obvious enough, by the way, gang, simplertrading.com/auto is where you can register for my next webinar. It is a week from today. How to automatically know. And when I say automatically, I don't mean mindless. I don't mean just look at cute little colors and decide to do something. I mean, how do you find zones that have a logic behind them, that have a high probability of giving us support and resistance? That's what automatically means. Time tested, decades. So how to automatically know when to buy or sell or stay out of any swing trade. We're going to talk about longer term time frames. This is coming up on Thursday. So you can check that out at simplertrading.com/auto. I am super stoked for this. All right. So let's kick it off with the questions. Let's see what we've got going on here. And let's see, starting off with Ian. All right, good morning. I've limited myself to 1 trade a day with what I was wondering if I get into a trade and I take a good loss. I love that, a good loss. Taking an L, taking a good loss really is a skill for life, isn't it? And a better trigger pops. Would it be okay to not take it? I guess let's go upstream to that, Ian. Why 1 trade, right? I love that you're being discerning. One of the first things I recommend to traders when they come to me and they tell me they're losing is I tell them to cut the number of trades that they are habitually making in half, because it automatically gives us fewer opportunities and it inherently gives us more discernment. We're choosier, right? That's all that it means. So why 1? I mean, maybe 2. But as far as would it be okay to take it? Well, I guess, Ian, let's go back to something we talk about a lot in the Sector Secrets Mastery, which is the only holy grail that has ever been, which is risk management and position sizing. And they are really one conversation. What are you risking on that 1 loss? Is it something that you've hit your max for the day on that 1 loss? Or can you persist and not put much more than maybe a superficial scratch on your account, as opposed to, really hitting it hard? So I think the answer to that question is, what is that one loss percentage, right? And then sort that out and then go from there, right? That would be the best way to tackle that. Make sure you know the math, as I like to call it, the market money math. All right, next up, Prince asks, if I had an open position where I'm down 10%, some unexpected volatility comes in and now I'm down 35, do I cut immediately? I find myself frozen in those moments, right? So that's a mixture of tactical risk management and then also psychology. So if something happens suddenly, right? This is not always going to be the case, but if something happens suddenly and it's not associated with a hot zone, let's talk about hot zone associated volatility and not hot zone associated volatility. Because if we go into hot zone associated volatility, we've already presumed we're going to sit in a much more volatile situation, right? So I would differentiate hot zone and not hot zone from that conversation, because a hot zone hold, I've chosen to trade through a hot zone. We know 35% or more is not out of the question. But I think what you're talking about maybe is something like what we saw the other day with a lot of that FOMC speak. And the question then becomes, what about unexpected volatility? When I am getting a non-hot zone volatility moment, I will give it a few moments. I will take a breath. I will give it about 60 to 180 seconds, 1 to 3 minutes to sort itself out. Because how many times have we seen a wick just left behind after some odd headline, news, five finger, who knows what? Hot zone related issues are different than non, and that's how I would tackle that. Okay, Prince? Thanks for the question. I'm sure that's something a lot of folks are dealing with. Another adjustment, it's a little bit a different approach, but another adjustment is if you find on those short-term time frames that 10 to 35 is happening and it's becoming something that's unsettling to your approach, try lengthening the time frame. And we're going to get into quite a bit of that on Thursday, where I'm going to talk about the fact that unlike most of 2022, where, let's face it, gang, for the last 6 months of 2022, I won't say I exclusively day traded, but I'd say 80% of my activity was on a 5-minute time frame, because who the heck knew what was going to happen after noon? Forget Monday to Tuesday to Wednesday to Thursday to Friday. What was going to happen after lunchtime? And that way, staying nimble, staying short term, having a very small window of opportunity and follow through was sort of what the market demanded of us. Instead, 2023 has given us a gift. It's opening up daily timeframes. It's opening up follow through. We have a trade right now open, which would seem a little counterintuitive. Equity markets are kind of down. We're up on an Amazon position. Why? Because we've got that overnight follow through finally. So another possible adjustment, I won't call it a fix. It is a choice, right? But it has been a fix for me, right? But would be, hey, am I looking at a time frame that's allowing me to take these crazy wicks, right? And I think that's going to be an adjustment a lot of folks are going to be finding they're making throughout this year. All right, please give me the thoughts on GDX and RTX for a long. Sure, GDX I'm going to stay away from. That's an easy one, because until I get a better read on gold, I'm going to leave gold miners out. And I will tell you straight up, right now, gold and I, we are not vibing together. We are not vibing. And why might that be? Right now, real interest rates are in a state of turmoil. If real interest rates are in a state of turmoil, gold is going to be tricky to trade. So I'll stay away from gold, meaning I'm going to stay away from gold-related stocks as well. Now, RTX, completely different market. Let's talk about RTX for a moment. I'm looking at RTX, and here's RTX. RTX was in an uptrend. It is north of the 200 propulsion. Love that. And I really would focus on the long side, but we've got to wait for another oversold buy. So yes, I would like to get long, but not at these highs, Stephen. My approach does not allow that. Now, I don't know if we're going to put the DPMRs on RTX, but hey, bot, that might be a cool symbol to take a look at. It's liquid on the options chain. It's a great representation of IYT and XLI. Even aerospace and defense, that's a really cool stock with a lot of sector implications. Yeah, We'll think about it. HPMR and DPMR. Yeah, learn about it. Yeah, I think so. That sounds great. And so what I would have to do now, Stephen, is do I have a DPMR? Do I have a 1 hour setup that would allow me to get overnight long? And I do like that idea because if I don't get the oversold buy, or if I don't get the 34 EMA wave mean reversion on a longer term time frame, those DPMRs sure do help fill in those spaces where it seems like I have nothing to do until a more significant pullback occurs. And yet those DPMRs, volatility based support and resistance, have been working really, really well. I am looking forward to it too. And it's funny. I guess it's kind of like an athlete. In the off season, you're training, you're prepping, you're doing all this stuff so that once the season is here, you are ready to go. Yeah, Bot and I, now mind you, gang, this has been a process that's been decades in the making. The DPRM itself is something that I've been doing for 10 years. It's the automation, it's the upgrade and the curation of the data that's giving us really great accuracy that I'm so stoked about. And the automation helps a lot because I used to do this manually. So I'm finally, after 10 months, 10 and a half, I guess now, that we are just pounding away, trying to break this thing, right? Talk about a stress test. Yeah, it's passed the test. I'm stoked to share with you guys, with everyone, what we've been doing. All right, next up, when I say time frames, thank you, Chaz. Are they central? No, no. I always speak in Eastern. Thank you. I always speak in Eastern. I'm on the East Coast. Um, that's where I am. So when I throw a time out there, I try to say East Coast or Eastern time zone. But yes, I'm always going to talk in East Coast. Now, simpler trading headquarters, I'm in Florida HQ, right? I'm on the East Coast. Simpler is in Central time. So Simpler tends to quote things in Central. But yeah, I'm always going to give you time personally on East Coast. But yeah, and, really, this kind of bugs. We should be talking in East Coast. Let's be real. And I think we will be soon, just making that adjustment to East Coast time, because you're absolutely right. The market is an Eastern time zone phenomena. Absolutely. Yeah, I'm with you, Chaz, but I will always give you East Coast. Yeah, that's central stuff. I mean, really. Now, if we were trading commodities, if we were trading commodities as I did for so many decades of my career and still do as well, the commodities exchange is in Chicago. So when I'm thinking commodities, I actually think Central Time, right? The main exchange is the Chicago Mercantile Exchange, is a CST phenomenon, right? As opposed to stock and stock options and indices, which are that East Coast phenomenon. Yeah, absolutely. So I'm with you. Now, I always tease Bot because Lorna Bot's in Pluto, and I don't even know. Lorna Bot, what time is it on Pluto? About 4 in the morning? Yeah. All right. So I got a question here about the VIX. Can we take a look at Wix? Not okay. I saw VIX. Sorry, Joker Trader. Can we take a look at Wix? Sure. Neutral. I would want to take advantage of an oversold buy. It's back above the 200, which is inherently going to be a little bit more bullish, but I would have to wait for an oversold buy. Gang, I will tell you this. I know a lot of traders see an up candle, and the up candle is what gets them bullish. That's not what gets me bullish. Momentum is not what sets up the trade in terms of the overall structure. Trend is. So I would say if you're a momentum trader, if you can find momentum that gives you an advantage to your fill within the context of the larger trend, you're going to use momentum more effectively. What do I mean by that? Well, it's really what the DPMRs do, right? It's really what even HPMRs do. It's what a slow stow does, which is let's step back and look at the larger trend and then find that moment where I can, and I do feel like this, where I can steal an option. We did this in Amazon the other day. We did this in Nike the other day. I feel like I am literally pickpocketing the person who's selling me the call when I'm able to buy, say, Nike when it sinks down into support. The bigger picture might be oversold, so it's support. The bigger picture might be a retracement of an overall uptrend. But by capitalizing on the momentum that seems on the surface counter trend or counterintuitive, that's actually what we want to do. bigger picture trend, momentary movement in the opposite direction so we can scoop up those options. So that's what I need to wait for on, say, Wix, Joker Trader. That's what I'd have to wait for. All right. So it's midnight on Pluto, says Lorna Vaught. All right. Okay. Next up is, can we take a look? Hey there, Eva, at XLE. Absolutely. Absolutely. So let's take a look at XLE. And what other markets do I look at if in XLE? Well, I would start off with that tide, that bigger picture first. But then what I'll do, and let me show you, Eva, this is a very common practice. This is how we not only scan in the Sector Secrets room, this is how we understand relative performance. And frankly, there is just nothing when it comes to relative performance that does it as effectively as a simple, albeit a little busy, layout, because all I'm doing is focusing on these trade flags. Now, to jump on over to XLE, I would prefer to have a really good read on crude, right? So just as the earlier question on GDX, right? If we're looking at GDX, I think as Stephen was asking, Eva, if I'm looking at oil stocks, I want a good read on crude. So here's XLE, and it's still kind of neutral. So what other markets do I look at if you're in XLE? Two main markets to look at. One is Exxon, two is Chevron. That doesn't mean that those two are the ones that are going to be the setups, but it does remind us that we live in a high concentration weighted world, meaning we are we're operating in a market where a very small number of stocks have much wider application, much wider influence, impact on an index, on a sector. XLE is going to go pretty much wherever Exxon and Chevron led it, because those two stocks alone account for, I think, about 50% of the weighting here. So not that Schlumberger and ConocoPhillips and EOG and Pioneer and Marathon don't matter, but their weighting is so much less. I believe the next 4 or 5 stocks still don't have as much weighting combined as Exxon and Chevron do. So that's what I would look at if you're an XLE. And it's very important that Exxon and Chevron continue higher. And I got to give Bot a quick shout out, because we traded Exxon just last week, I believe it was. And that was a monster trade where Exxon took off from, I believe it was the wave. And we had a nice little buy there, and then found out later on that day, oh, there was some Russia news. We don't trade news. We trade structure. If you're ever wondering, Rog, how do we deal with the news and these volatility events? It's amazing how often price structure puts you in a position to be able to realize, A, this market's way volatile. There's some shenanigans afoot. Or you realize, oh, this pullback is actually a retracement, a mean reversion of a trend. Let's take advantage of it. And I do believe that's exactly what we set up the other day for Exxon. So love that. All right, let's see. Joker, you're in Wix from 87. Oh, okay. Let me go take a look at it one more time. And you're looking for it to get to 100. Okay. Well, there's a couple things in the way. Joker, you could go check this out at TradingView. I don't use 20 and 50 and 100 and 2. I don't use those simple moving averages. I haven't in decades. Not that they're not good. I think there are levels that could be a little bit more helpful. That being said, there's a free tool called the Darvis 2.0, which you can get either as a member of Simpler in any of the rooms, or even head on over to TradingView. It's wide open and available there, and it will automate support and resistance on your chart from a price pattern based perspective better than anything. And there's an obstacle at 97. So while 100 could very well be a target, beautiful century psychological level, keep an eye on that 97 level. All right, gang. So that is it. Hey there, my friend. First time watcher here. Highly impressed. Glad to see a woman killing it. I appreciate that. You know what? It reminds me of one of my favorite race car drivers, Lynn St. James. And they said when she won Indy, so, what's up with that? And she said, the car doesn't care if I'm a man or a woman. It just knows how I drive. And that's what I love about the markets, gang. It's kind of like equestrian. The horse don't care. All right, gang. Have a great one. Have a great one. As always, thanks for caffeinating and dominating with me. My Sector Secrets Mastery folks, my Simpler Futures room. I will see you all in just a moment. Everyone else, 9 a.m. tomorrow, same time, same station. Be good to each other.